Start show. We're live again for another episode. Um, I was so the last 2 days I was the sickest I've been in a long time. I got some really bad gastro bug. All my kids got it too. It was just still recovering from it today. Back onto solid foods and all of that. So making a recovery, feeling much better, like 80% better today. But thought I would just go on and I don't have a title for today's video, so I just called it the Mike Rosehart Show Live. It's always the Mike Rosehart Show, and usually I have a title, but today no title. So bring your questions, talk about whatever you guys want to talk about. What do I start with? Usually I start with the stocks. So what's been going on in the stock world? I think that there is some amazing value in the stock world right now. Specifically, my favorite pick as of today would be Intel. Intel Corp, INTC. It is trading at a 6.5 price to earnings ratio. It's a nice, healthy blue chip dividend stock. The future of tech, the future of automotive, the future of crypto, the future of finance, it's all in the chip space. We are going to need chips to drive our cars, our buses, our trucks, our transportation, our logistics. The entire decentralized finance crypto world will be running in some shape or form on chips. So I like your TSM, your Taiwan semiconductor type companies. I like your NVIDIA. I like Intel. And I like Intel the most because they're beat up quite a bit today. I think they were down like 6% at one point today. And this is for a company that, when the market was moving 3% down, it typically is moving 1 or 2%. And this is just all on bad potential guidance for the next quarter. So I really think that I think there's some value there with being in this bear market to load up on some Intel. At 6.5 P ratio, I feel like it's hard to really, no matter how bad things get, you're buying at such a discount that the cash flow machine that is Intel. And by the way, when you're buying a computer, like again, Intel still solid producer there as well. So there's a lot of areas that they're delivering in. I'd like to see them do a better job from the management is the only weak spot. I think that their management could be better. It's a lot. I wouldn't compare it to Canada in the sense that like Canada is a beautiful country with a lot of natural resources. We have, we're an amazing amount of, we have a smart population. We have a growing population. We have some of the most quality natural resources in the world. We're just under really bad management. Intel's kind of like that. The management's not near as bad as Canada's management, but that's something they need to work on. So anyway, if you're going to load up on something and you do believe that picking an individual stock portfolio will outperform the market, the bag is out on that. The verdict, I guess, the judgment's out on that. There's tons of data that's conflated, but it basically can be argued that over a 25-year period, almost no traders or stock pickers outperform the market unless you pick a trend and you stay ahead of a trend, you get sort of lucky, so to speak. Like there are guys who got into crypto at the right time and they rode that trend. Tech, the last 5 years and rode that trend. But yeah, anyway, I go back and forth. Like right now, I am outperforming the Nasdaq. I am outperforming the S&P 500. I know I shouldn't be, but I am. It's been a good couple of weeks actually for me. I'm delta neutral right now, so I have shorts to cover all of my longs. So if the market rips up right now, I'm not feeling a whole lot of that gain. If it rips down, again, I'm not feeling a whole lot of that loss. So I'm trading it sideways right now. And the reason I'm sort of straddling that is because I'm collecting premium as these contracts expire. I collect premium on the theta decay. So that's how I'm trading right now. A lot of cash, just waiting to see if and when the Fed begins to go from hawkish to dove. I think it's going to take till early next year. I think they're going to keep cranking on the rates. It's going to be painful, and I think the worst is not here yet. I think June will be a decent month. I think July is going to go down. I don't know though. I don't have a crystal ball. Hell, none of us know. I'm not going to bet real money to pretend that I have any fucking idea what will happen in the future. None of us do. And anyone who tells you that they have a good idea, they don't. We have, there's general market cycles. As an example, high interest rates, and when the Fed is cranking on the interest rate lever, so as in they're raising interest rates and they're not printing as much debt, there is always a recession that follows that in combination with high commodity and oil prices. So we are going into a recession, if not already technically in one. They may announce it next month. We'll see. It depends on how the market trades. We may be technically in a recession. The NASDAQ is already in a recession. So yeah, what we do know is that real estate, by and large, independent of other factors, does not do well with higher interest rates. Affordability rates drop. The ability to make those payments also drops. What you can qualify for drops. So even if people were stupid enough to want to overpay in a recession with high interest rates, they can't because the bank won't even approve them for the mortgage. So that's good. It's bad in the sense that it's not good for the price of real estate, but it's good for the homeowner who would have otherwise overlevered and overextended themselves. Yeah. Ooh, we got a super chat. Super chats always get first priority. Have you ever considered hiring somebody to do your property management rather than a company? You have more control of how the person works. That could be a decent part-time income for the right person. My current portfolio is actually managed by a fantastic girl. Her name is Courtney. She is fantastic here in London. So I'd be happy to refer anyone who is in London and is looking for someone to try out. She's someone who's been just working for me. I know she's always looking for more work. I don't have enough properties anymore to sustain her. It's kind of a part-time thing for her right now. But yeah, that is exactly what I do. It is what I did before. The challenge with that play is I had a property manager about 2 years ago, and I'm still dealing with this issue. And I should just litigate, but it's just, anyway, it's conflated. But they ran off with a bunch of my rent. And it was an individual person. And this person had no security, was not bounded, and was an immigrant, actually. And basically took first and last and said, hey, in my books, we're good. And it's like, whoa, let's do the math here. And it's like, you've got like $25,000 in rent that's unaccounted for. And it's like, oh, well, that tenant didn't pay rent. So I go to the tenant. The tenant's like, here's an e-transfer that I sent to that person. And then the person just disappeared. So I did have a bad experience once with theft. So that is a challenge. Sorry, the point I'm trying to make there is that's a con of hiring individual people. The girl I have now, she's fantastic. And I've had about 5 years ago, I had someone really good too that was just for me. Like I hired someone individually. The challenge with hiring someone like that is you have to train them. And property management's a fickle business, and people don't stay in it long because it's not very fulfilling. The leasing portion of it is more fulfilling than the day-to-day management. It takes the right kind of person to really thrive in that role. And what I found is it's a lot of energy to manage. Whereas if you hire a company, you'll pay more. Your fees will be a lot higher. You'll have a lot less control. They're going to be managing dozens of other properties, maybe hundreds of other properties. You won't get the same you don't get the same level of treatment, but they'll have an accounting department that'll keep everything up to date for you. They'll have a list of trades they can call. They'll have a leasing manager as well as a property manager. They'll have a 24/7 number. It just is a more robust service. Again, I am a fan of the smaller property management people. If you have, say, less than 100 units, if you're at a scale enough where you can hire someone on your own, definitely do that. Again, I'm looking to slowly. I still have 6 rentals left in my house, and then I'm looking to blow up in a couple of different businesses in Florida. I like to buy, so the real estate piece in Florida I think will be huge. I think we will bring on someone. Ideally, I buy an existing property management company and absorb their systems and their people. That's sort of an ideal way to do it. But I'm also cool with partnering too. Partnering is a great way to do it. It's hard at the end of the day to want to own these property management companies because then you're liable, right? Especially in Ontario, we're getting up the landlord tenant board for this, that, and the other thing, right? So in Ontario, it's a tough business. Airbnb is more interesting, I find. I think that Airbnb is a better market here in Ontario because you're not bound to having tenants. Well, inflation runs wild and you can't increase your rents here in Ontario. With Airbnb, if a tenant destroys a place, you just hit their credit card and you're good to go. So yeah. That was a great question. Thank you for the super chat, by the way. It means a lot when you guys super chat. It tells the YouTube algorithm to get people on the stream, right? It says, hey, there's some value here, and people jump on, even if I do a horrible titling like I did today. Unfortunately, I did not do a clickbaity or searchable title, so it's got no call to action at all. But the regulars will come on, they'll find it, and they'll watch the replay. So appreciate you guys for tuning in tonight. It'll probably be a 30-minute episode tonight because, again, I'm still not feeling at full stride, but I'll do my best for you guys. Hey, Eric, how you doing? What are we going to do as miners when ETH merges later this year? Yeah, who knows exactly when it's going to merge? Q4, maybe Q1 next year. for the longest time, they were calling it to be start of or end of 2021. Then it was start of 2022. Um, I don't know. I don't know where it'll be. I think what we'll do is we'll shift and we'll just mine something. If you're a GPU miner, you just mine something else, right? There's a million other tokens that you could pick. And if you're bullish on a certain token, pick something that's underappreciated and hold on to those tokens until the next halvening or the next bull run, right? Tends to be everything just follows the Bitcoin cycles. So the next Bitcoin halvening would probably be the next bull market. So we're looking at like 2024 for the next time that we see another big bull rush. So just hold on to all your, if you're a miner, hold on to your tokens. If you can afford to carry the hydro, afford to carry any repairs, whatever else, just hold on to every token that you can mine now, because those tokens will be worth a lot more. If you're mining, one ETH now might be worth, say, $2,500 Canadian or $2,200 Canadian, whatever, but it'll be worth 10,000 Canadian in 3 years, right? So I would say just hold on to that and wait for that bull market to unload those tokens. I'm not selling any tokens now, other than for tax purposes. I can see I was discussing how one could, with someone on Instagram was messaging me and saying, hey, like, personally, I've got this crypto portfolio, and they laid out their whole thing for me. It was like almost a coaching call, and they got the corp where they were investing in as well. And there's some smart strategies from a tax perspective of closing off your entire personal holdings, taking the L personally, having a capital loss. You can offset any other, if you sold a business or you sold some properties or whatever, you can offset that tax to almost nothing, and then rebuy using your stock portfolio. There are a lot of ways you could rebuy the same holdings without having any tax issues. So if you sell, in your personal name Bitcoin and buy Bitcoin again in your corp, they're going to know that you bought the same thing within a 30-day period. You get in trouble, and they'll not consider that a loss. But if you wait past, like, there's a 30-day waiting, I don't know, you have to look it up to your accountant, but there's a waiting period. But there isn't a waiting period if, like, you sold your Bitcoin, took a loss, and then went the next day in your corporate trading account and bought MicroStrategy. MicroStrategy literally follows the price of Bitcoin. MicroStrategy does other things beyond just holding Bitcoin, but that's Michael Saylor's basically just tracking Bitcoin. So you could, in theory, just hold those shares and have the same exposure, and also be able to now hold that exposure and sell covered calls on it too, potentially, to generate some extra cash flow through this bear market. And that might be a smarter strategy, because now you've taken, if you're down 50% from the highs on Bitcoin, let's just say you're down 50%, say you bought in last year or whatever. A lot of people in the crypto space are down half, right? You have $1 million in it, it's worth 500,000. You could have a $500,000 loss. You could offset your personal tax bill now, and then in the future, when there's a bull market, then you can worry about paying tax on everything inside of your corp. So you've structured and moved income out of your personal name, taken a loss, and then moved it into your corp, which can be very tax efficient. So there are strategies in a bear market you can apply that will leave you further ahead. So it's not all loss. You can tax loss harvest. So there are some things you can do in this down market. But Mike says, hey, Mike, hope the flu is past you. It is mostly past me, or rather, I've passed it. Ooh, some visuals there. Sorry about that. What short-term rental markets for Florida would you look at? So you gave me some examples of Miami, Palm Beach, Cape Coral, Naples, Fort Lauderdale. So I spent, you guys know, I spent 3 months there earlier this year, and I pretty much go to Florida every year for the last 8 years or so. We go almost every year. And this year we did a trip specifically looking at properties. I started way up in, we drove through Jacksonville and down, but really we didn't stop until we got to New Smyrna. New Smyrna Beach was the first place we really stopped. I was like, wow, there's some Airbnb potential here. It was a surfer capital. It's really close to Daytona Beach. We did spend a little bit of time in Daytona Beach, but we stayed the night in New Smyrna for 3-4 days. And then we went down all the way, staying in a whole bunch of little places all the way down to Miami. And then we went up all the way to Orlando, checked out that, and then went way up the other side over to, I guess my mirror's reversed because Ken reverses everything. And then we did Tampa and all the way down Cape Coral, Naples, all of that. So stayed in all of those places. My favorite personal places, just to share what I liked, New Smyrna had a really great vibe to it. It was kind of like a beachy surfer town vibe. I really liked it, but the price of real estate was fairly high. There was some great re-rental arbitrage opportunities there, which was interesting. I also really liked moving down the coast towards Miami. Stewart was a great little town. I think has a ton of potential for Airbnb plays and for, it's again, really expensive. Um, Jansen Beach also really expensive, but great in Stewart there. And then going down, there were some opportunities in places like Fort Lauderdale area. There's a whole bunch of little places in there like Pompano Beach and all that around Fort Lauderdale that are interesting. The cap rates just were not as attractive as I would have liked. And then south of Miami a little bit, there were some opportunities too. Um, I think if cap rates were to improve, could be really, really interesting. And then on the other side, where were some of my favorite places? Um, there was like, I think it was Sand Key Island was awesome. That was right near Tampa there. Um, what else was really great? Cape Coral and Naples, they were also fantastic. They weren't that much better to justify the hype and the price, but again, beautiful, well kept. Um, I got close to buying something in Cape Coral too. There was a really nice property there, but didn't pull the trigger on it. I don't know. There's so many opportunities too in Central Florida as well, where you can get some double or triple cap rates. I don't know that it's worth paying the hype prices in Naples if the rents justify. So I'll give you an example. Like you can buy a really nice house in Central Florida, an hour from the beach, on a nice lake for 250,000 USD. That could rent for 4 or 5 thousand a month on Airbnb if done well. Or you can spend $1.5 million in Naples for something that'll do 10,000 a month on Airbnb. And it's like, I'm gonna spend 5 times the price to get 2 times the rent roll. The math just doesn't work out. So you're paying a significant premium. But yeah, I mean, there's some luxury to that. One of the dangers of being on the coast is again the hurricanes and stuff. So you got to go to hurricane insurance, flooding, and all of that. We've seen Miami was underwater. A good portion of it was underwater during the last storm recently here. So there are obviously risks to being on the coast versus being central. So I can't say there's a better. For me, it comes down to buying quality stuff. I'm going to buy a property in Miami. I don't want anything that has anything on the first floor except for parking. A lot of the multifamily you'll see has parking on the first floor, and the residential and the stuff that's occupied doesn't start to the second floor, and for good damn reason. Flooding's gonna be a pretty big issue, right, going forward. So, yeah, I would say that there are so many good markets. It's hard to say one is better than the other. For me, it's going to be where can I develop a competitive edge, and where are the wholesalers not competing as hard with, where are the buyer lists not as strong, I guess. Where can I get the best deal? So if I could buy in Naples, if in Naples everything's 1.5 million and I can find some properties at 900,000 that are worth 1.5, I will be in Naples all day. I'll develop a team around that. For me, the deal leads everything else. And so it's about developing the right deals. It's just hard to lock those kind of deals down in those good markets because there are so many rich cash buyers. Naples is actually one of the richest places per capita. It has I heard some stat that it's the wealthiest in all of the US. You'd think it'd be Malibu or something, right? But it's not. It's Naples, one of the richest places. So there's so much cash and wealth there. So it's hard in some senses to score really good deals. That said, it might be less sensitive to a recession, the big R word, right? So yeah. Hey William, how you doing? Texas Instruments friend said chips get hammered if there is a recession. This is true, especially a crypto recession. That said, I mean, you can only go so low, right? I think that there's such a need for people to shift to the EV trend automotively. Just so much of a need for these chips that yes, they are hit in a recession, but how low? It's already a 6P ratio, right? How much worse can it get for Intel? I feel like it's a safer place to park your money for when you believe in this recovery play. And I think it's not a great bear play, but for me, it's something that I'm holding. I've had these shares since, for a while now. So I've watched them drop 20% in value, whatever, 25% in value or something since from top to bottom. I'm still holding because I believe in them. That said, I have other companies that I've cut loose. I've cut loose half of my shares of SAM, half my position gone. I cut several other positions that I don't feel great about. I honestly feel better about Intel than I do about, say, NVIDIA. P ratio wise, just looking at their numbers, I get that the market feels better about NVIDIA, but I don't know. I like Intel. I think there's some value there with them. So hopefully management can turn things around. What do I know? Remember, at the end of the day, the best thing you can do is be diversified. Don't buy one stock, buy 150, 200 stocks. Buy the whole index, for God's sake, and don't worry about it. Buy the S&P 500, buy the VTI, buy the World Index, buy the Toronto Stock Exchange, buy a little bit of everything, buy your high growth dividend stuff too, but balance it out, be diversified on a little piece of everything, and over the long term, you're going to grow. And that's the important part, is that when you're trading, you're trying to beat the market. It's very, very difficult to beat the market. So, remember, I just want to make this point real quick. In the stock market, you're trying to outperform the smartest algorithms that know all of the input variables you're trying to do in your head when you're trying to calculate, is this, call worth selling? Is this put worth selling? Whatever. It's running all these things all the time. So it's way more efficient than you can ever be. Furthermore, you're competing against large and small funds that are spending 60 to 80 hours a week per employee, and they have whole teams, Bloomberg terminals, the latest and greatest research, trying to develop edges. And many of them do develop edges, especially in the smaller, where they don't have a lot of capital to work with, where they're working with like less than, say, 250 million. You can develop a competitive edge. There's no doubt. And you can beat the market. A lot of small prop firms have. But you as a person watching my streams and watching like a few other people's streams, and I didn't do it today. I didn't turn on my light there. Ooh. It's a little bright now. A little circle light on half power now. But you watching this, trading on your phone on Interactive Brokers, or trading on your computer on Interactive Brokers 2 hours a day, part-time, on your lunch break, or between doing business calls, you will not outperform the market over a 25-year period, statistically speaking. 99 out of 100 of you will do as well as the benchmark or worse. That's just a fact. And then value your time. If you're spending 2 hours a day checking your stocks, and the stress and everything else that goes along with that, and you just put that time and stress into developing a competitive edge in business, in real estate, somewhere that time pays off. Because in the stock world, sometimes you spend all this time and you go backwards. You get emotionally involved in the trades and you revenge trade, especially in a recession. So just word to the wise, it's smart to be diversified. I think you should have like a quarter of your net worth in the stock market. I will always have exposure. I believe in it. It helps you actually qualify for business deals. It helps you qualify for, all of this stuff, right? And I think it's important to have that diversity. But again, I don't think you should have your whole entire net worth in the stock market, unless you're like, hey, I'm putting it all in the stock market. I'm not trading it. I've got a little piece of everything. I'm fully diversified. I'm collecting dividends. You can, by the way, build a really cool levered dividend portfolio where you're buying only the cleanest quality blue chips from all the best countries in the world that have an average yield of 5 or 6 or 7%. And then you're borrowing Interactive Brokers. 70% loan to value is the maximum you can do at Interactive Brokers. But let's say you borrowed 50% loan to value. They're lending to you right now at 2%, less than 2% interest. And if your yield's 6%, your spread between your dividend yield, plus there's a capital appreciation on top of the dividend yield. So those dividend stocks appreciate, which mine have as an example. In the last year and a half my portfolio is a dividend portfolio. And that dividend portfolio is up 25% or so right now on the last 14, 16 months. I'm levered too, 2 to 1. So I'm actually at 50% return on my capital investing in boring dividend stocks. Food for thought, right? That's a strategy that's cool. And I think that that's one that I don't look at that one. Like, I'm holding a bunch of great names that I feel good about, and they pay dividends and we don't worry about it. It produces income for us, and it more than covers the cost of interest. If I need to go buy a property, I can borrow, let's say even $1 million in stocks. You have access to 700,000 at any given time. You can borrow against those blue chip, if they're all high quality blue chip dividend stocks, that you can borrow against. And that means when you buy a property, let's say it's $400,000 property, and you're like, geez, I need 400 grand. You don't have to sell any of your stocks. Your dividend stocks get $1 million in dividend stocks, producing $50,000, $60,000 a year in dividend income, plus any appreciation on that stock. There'll be capital appreciation. It'll happen. You get 5 or 10% here and there. and it'll be great. And you can borrow from that at 2% interest or less. It used to be even less. As interest rates rise, it's obviously getting less and less attractive, but we're talking around 2%, maybe a little bit more now, might be 2.25 now. But yeah, you can have access to that capital and away you go, right? So that's a really nice piece to stock investing, is the leverage component that's attached to it. It makes it almost as attractive as real estate. Now, the thing for me that makes it difficult to invest in stocks, and I can understand someone watching this who has no competitive advantage in real estate, has no competitive advantage in business, doesn't want to develop one, has a full-time job, has no interest in any of that. Disregard some of what I'm saying, right? Or discount it at least, because I have a competitive edge in real estate. I can go find properties at 60 cents on the dollar. If I spend my time doing that, I will continue to find deals at 60 cents on the dollar. So I can make 50, 60, 70, 80% return on my investment. That requires time to get that, and stress and effort. No doubt, it's a business. That doing real estate the way that I do real estate is a business. And it requires my effort, my time, my skill set. But I can get a way higher return. So for me, it's really hard in a bear market to want to invest in stocks and crypto when I can go chase real estate in a bear market as well and slaughter deals at huge discounts. If I knew how to buy stocks at 50% off and then be able to realize that in a few months back to full value, I would do that. If I could fix up stocks, if I go in and change management, like if you get rich enough as a VC kind of guy, you get in there and you can actually have control of these businesses. You invest in these, like Warren Buffett, or not even Warren Buffett, but like Bill Gates, let's say. He's very, or Elon Musk as an example, right? You see a company you might really like, you can get there and make changes. You can go buy Twitter if you want, right? You can go buy a company and turn it around. And that's where you're being a real value investor. That's where you're able to unlock the value, where you're in control of the catalysts. Fortunately, I'm not in control of the public markets. And in the stock world, you're competing, if you're trading anyway, and if you're investing for the long term, ride the market, you'll make your 10% a year, you'll be happy, it'll be all good. There'll be volatility along the way, but teach their own, each person's different. If you don't want that volatility, build a dividend portfolio. And then you have that stable 5-6%, and the appreciation stuff doesn't matter because you'll get that, but you don't have to worry about it because you got your cash flow coming in. And bear market, it psychologically feels a lot better. I'm a dividend kind of guy because it's harder for me to sleep. I'm able to handle the losses, but I just don't feel great about it. I feel much better about a stable portfolio. But anyway, my point being, depends on the kind of investor you are. So each person's different, but I think there's some real value to diversifying, and it depends on where you're at. If you're fully retired and you don't want to do any, like I look at deals for fun. I look at real estate for fun. So, at smaller volumes, real estate for me is fun. And the stock stuff is also fun at smaller volumes. But I realized that having everything spread out into different buckets is really important. So that was the point I'm trying to hammer home here is diversity. Diversity of asset classes. Next question here. Where did I lose off? There we are. Thanks, Denny. I appreciate that. Eric, I like that. Mike says, bought about 2 weeks ago at 99 for $200 close, 95% today, but held like I could have rode the train harder. I mean, yeah, there's always a play. There's always a play. Never beat yourself up for taking some profit. I've heard about KWEB before. Someone's jumped on here and said that before. It's Chinese internet ETF has been flying recently. Do you have any exposure to China or emerging markets? I used to have a little KWEB. I don't right now. I don't think I have any in my portfolio. Where's the best place for hard money lenders to gain leads for lending? MT 2.0, I would say the best place would be calling up a bunch of brokers. Like just call up all the business brokers on Kijiji, on Craigslist, on Facebook, and start talking to them and say, hey, I've got a pool of capital to lend out. Do you know of any flippers who just got rejected? If they get rejected, let's say their financing's falling apart a week out on closing, on a flip or on a close, and they're a solid client, but the bank just didn't like something, didn't rub them right, and they rejected them. Oftentimes people are super desperate, and that's when you want to jump in as a private lender, is a week out from closing and they have no other options. No bank can even underwrite the deal fast enough. That's where you can get in there and be nimble. And 2 days before closing, you can get in there, you can underwrite the deal, and then you can fund it. And in those situations, you can charge large lender fees and deal review fees and appraisals that you can conduct yourself and make juicy fees there. And you can charge larger interest rates. So that would be the place to go, is talk to a whole bunch of brokers out there and find those deals that just have fallen through, rather than let the deal fall apart or risk getting sued. Most of the time, they'll take your money and they'll refinance your money out 3 months later. And you'll make a great return for 3 months saving someone's deal. So that's the guy I like to be, is the private lender that's saving someone's deal or funding someone who's got a business, like a flipper, who's got a consistent track record. Those are the two people I lend to. That's it. Yeah. Thoughts on TQQQ instead of buying QQQ on margin? You definitely could. Yeah, I mean, it's basically levering it for you. You're getting a multiple on the return. So yeah, I mean, the challenge I think with those is sometimes the option stuff could eat away at, but then at the same time, the margin is going to cost you an interest. So probably just buy the TQQ. Da, da, da. Next question. I'm going to skip the net worth question. I've hinted at it before, but I prefer not to share what my net worth is. I have too many haters out there that would, not haters, but it's come up before. I went to landlord-tenant board once for a tenant, and the tenant literally used it against me. It was like, this person has X amount of money. He should therefore have to pay me more in compensation. And the adjudicator actually heard that argument and was like, fair point. It's like, what? Fair point? What? Because I own the building and someone else versus someone else, there's different amounts of rent abatement? What? But anyway, so I don't like to share that, but I'm doing very well. And I'm thankful that I have all the opportunities that I do have. Sanam says, can you talk about how you will pursue homeschooling? Join a Christian group or doing it solo? Thoughts on unschooling? So my wife is more into this than I am. She's like, you can give her a follow, at least Rosehart. She's big into this stuff, and she's always watching those videos and learning about all that stuff. She's big into the unschooling, all that stuff. At a high level, the belief is that we need to cover a certain core curriculum, which can be achieved in like 2 hours a day. So the reading, the writing, like math, all of that stuff, the important skills can be covered in 2 hours a day. We might, do different things for physical education as an example. So instead of, running laps inside of a gym, we might go for a hike as a family, right? And instead of having art class for 75 minutes, we might put on a YouTube tutorial video where she learns to draw and paint. And we do all of that already. So there's a lot of ways to have a more robust, customized learning experience for your children. I plan to, at the latest, grade 7 or 8, integrate heavy business and money management skills into my curriculum to the point where, like, I'll be honest, all of the math that I studied, okay, excluding statistics and probabilities, and maybe those are the only 2 classes I can think of that were valuable in high school. And in university statistics was useful too, for understanding, how to critically analyze a good set of data in a study and whether or not it's a good study or not. But beyond the critical thinking skills needed from stats, none of the math that I learned, that I had to take, like I had to take like calculus and vectors. There were 2 separate courses, calculus and vectors, when I was in grade 12. And that has served me zero in my life. Probably I spent 1,000 hours studying calculus and vectors. I've now forgotten all of it, or most of it, and I use none of it ever. So if your kid doesn't want to be like an advanced engineer that needs to know that, which is like what, 2% of people, 98% of people are wasting their time. So I think those types of, even like physics, like I don't think I've ever used the advanced physics stuff. Like just a lot of the shit that I learned in school wasn't valuable at all. And I think that there's a lot better plug and play modules we could put into a homeschool curriculum or an unschooled curriculum where you could be much smarter and more successful. If my kids want to go to university, I will happily encourage and, at least help fund it to some extent. But I think it's a waste of 4 years, if I'm being honest. I think they could do a lot more and build a much better resume in that 4-year period and learn all that they need to learn. So I don't know. Here I am, like an Ivy graduate, I obviously took the more advanced schooling path, and maybe I'm talking from the Ivy Tower, saying, in hindsight, it wasn't worth it, but maybe it's because I had that information that I can say that, but I don't know. I do talk to people who haven't gone to university and college, and, a lot of them have picked things up, more grassroots, and they're doing just as well. So I don't know. But yeah, I think that there are you could join some great Christian groups, could join some great homeschooling groups. You could definitely, um, you could do it on your own if you wanted to. You get a nanny and do it with your own kids, and then have your kids in a lot of extracurriculars for the social interaction. Like I have 3 kids, so my girls are getting the social interaction with each other no matter what. It's not like I have one child, I have 3. And so, they cross pollinate off each other. But we also will have them in, soccer. Like my daughter's right now in gymnastics, soccer. She wants to get into basketball. We're gonna get into lots of things, right? Lots of team sports where they're able to interact with lots of other kids. And that's the important piece. And having lots of play dates with their friends, all of that is important to building their social skills that they learn in school. It's just that I get to, instead of having my daughter come home and say, swear words or poop or act like a brat because she's around some kid at school whose parents spend no time with them and they're bullies and brats and just bad kids overall. I get to cultivate who my kid gets to be around. I'm around people who are also of the same mindset. And so I can ensure that my kid doesn't go around the wrong path with peer pressure from losers, because there are losers in every school, right? Lots of them. And unfortunately, your child might end up hanging around or influenced by a loser. And so you just don't want that, right? School systems, it's pretty shit. For now, my oldest daughter, is in school. She's in a great school. I have nothing bad to say about the school that we're in. Like, it's one of the best in London, one of the best in Ontario. It's a great Catholic school. They wear uniforms and stuff. It's great. Most of the kids are very well-to-do that go there. So I'm thankful for that, because on average, well-to-do parents aren't fighting as much. They also can provide everything the kid needs. So the nutrition levels are way up. So the kids' reading scores are better. On average, you're in a well-to-do area, the kids do better. So that's a big factor, that there aren't any poor kids at her school. I grew up poor. I know what it's like to go to school with other poor kids. And I'll tell you what, there's a lot more bullying, a lot more grumpiness and fighting and issues and distractions in class. And it's just not great. All of the data skews really bad around schools that have poor people going to them. Growing up poor, I know, like, firsthand what it's like being poor. It's not good. So that's the secret to raising good kids is, keep them away from the ghetto, keep them away from poor people. I know it sounds like super elitist and like, fuck, that's, even just hearing myself say it, it sounds fucked up, but like, in its simplest form, wealth does dictate a high probability of success in the education system. I'm an anomaly, right? I should be selling crack or like, a bum because I grew up poor, right? But I'm an anomaly. That said, most of the people that I grew up around are bums that were also poor. So it's, yeah. I want the best for my kids, right? And that's the important thing, is you got to do what's best for your kids. William says he had a friend that worked at TSMC. Taiwan Semi has close to $500 billion market cap. If Intel can get factories up and R&D steaming along, Intel will do very well, but will take time. This is true. If management can succeed on execution, that's what it all comes down to, right? Hey, Mike, what would be the best way to increase my income in this current environment? I think active business and active work is the best way to increase your income at this time without taking additional risk. So you can increase income in return by taking more risk, but then you could also lose a whole bunch of money. So this only guaranteed way to increase income during these times is either to optimize what you already have. So typically that means if you have an asset that's underutilized, sell it or refinance it and reutilize that capital. That's one of the major ways I look at people's financial situations, and I give them ways to improve. But the other way is just get out there and put your time in, hustle. Like, go find properties off market. Even if you can't close them yourself, assign them to someone, make a wholesale fee, right? Get out there and, flip houses if you want. You could do that too. Even in a down market, if you're buying smart, there's already fear in the market. So you get some great deals on properties. When the market turns, this will appear like a low point. Maybe not the bottom, but a low point nonetheless. And a flip can take 6 months, 8 months. The market might be rebounded by then, right? So I'm actually closing on a couple properties coming up. We have a farm that's closing up near Kingston, 15 minutes from Kingston. It's a 50-acre piece with a property built in 2011. Super excited about it. So I'm still buying, even though I talk about the bear game and all that. If you're buying the right deal and it makes sense, there's opportunities, right? We're buying this at a great price, so I don't feel so bad about this one, but as long as your numbers work, you'll be okay. So there's lots of things you can do in business and real estate. Business is probably one of the better ways too to do it, because if you can sell something for $10,000 and make a $5,000 profit, that's just you putting your time in most cases. And so I think in a recession, the best thing you can do is to crank out your output, put in the time, put in the hours. The worst thing you can do in a recession is to, and by the way, crank down your expenditures. So don't spend right now. Don't go on that lavish vacation. Any dollar you can get to invest in the market when it's 20, 25% down is going to have an extra 25% return for you, right? So that dollar now is just going to cost you even more if you spend it versus if you save it. So in a recession, don't draw on your portfolio and work your ass off. The time to chill and take the foot off the gas is during the bull market, not during the bear market. Yeah, it depends on your skill set. So you talk about ROI and ROT on your time, so return on time and return on investment. So I think there's a balance. There are certain things you put a lot of time in, you get paid a certain amount of dollars per hour. I still think that investing in business is the best way. So whatever thing you have skill in, if that business is marketing, if that business is, there's just so many things that you could invest in that will produce great returns on time. That depends on you though. If you're just getting started in real estate, your return on time won't be so great. But if you've got a great, I don't know, pick a field, pick an industry. If you're a plumber and your expertise is plumbing, there might be a way you can make $100 an hour plumbing. And so that might be the way that you explore. Or if you sell stuff on Amazon right now, there might be a way you could invest your time in that business and make $500 an hour, right? So it depends on where your current skill sets lie. If you're a doctor, right, you could, there's so many different ways you could apply that knowledge into a business where you could make $500 to $1,000 an hour, right? And that skill set might not necessarily help you at all in real estate. And so it depends on what your skill set looks like and how you apply that. So each person's different. Can't really give a good generic answer, but I have no XRP holdings, but I know a lot of people who are bullish on it. Why not hold a little bit? Why not? I don't know. I wouldn't bet the farm on it, but maybe a little bit. Why not? See how the lawsuit stuff goes. William says physics, advanced math matters to doctors, dentists, and engineers. Outside of that track, it's hard to argue against you. Yeah, I mean, agreed. Like there are, but even doctors, like how many doctors are using vectors and calculus? Like when are doctors using calculus? I don't know. Like even a lot of friends that I have that are engineers now aren't even using a lot of the advanced stuff they learned at university. Dentists either. Most dentists I know aren't using, I guess a little bit, right? Like it's necessary for the field, but on a day-to-day basis, you're not doing a ton of that advanced math, right? Or advanced, anyway, I'm rambling. Yeah, William says more likes, please. That'd be great. I agree. Like the MCAT, it's needed to get into the program, but when are you doing it actually in the field, right? Like when are people actually using that to save a life, right? It's just a lot of studying for no reason. Anyway, I get they're trying to weed out people who are not as applied or smart. Use the word smart, but like if you apply yourself, then pretty much anyone can score well on any test. Maybe because I find that if I apply myself to anything, I can succeed at it. But I do feel like if anyone puts enough time into something, they will succeed. Like anyone can score well in the MCAT with enough study. Same with the LSAT. You can study all of these and score well if you put the time in, right? So you're right. In that path, and if one of my daughters wanted to go that way, power to them. I would support them, and then they would have to take more advanced stuff. And to be honest, we wouldn't homeschool that because that'd be quite difficult. We'd have to get private tutors to help. And to be honest, they would learn a lot better with a private tutor than being in a high school with 35 other kids and getting no focus, right? To keep my scholarship up, I had to get and it didn't come easy for me, the calculus stuff, because it was so boring and I never did my problems. And it's just about practice and doing the problems, right? I literally hired a tutor in grade 12 to sit with me after school for an hour every day and do the problems with me because I couldn't get motivated to do them on my own. Like I'd get home and I would just not do it. I was like, I'm going to hire a tutor out of my own money. I hired a tutor using my own, I work at Tim Hortons. I took my money from Tim Hortons and I paid someone. She was a calculus teacher. After school, sit with me for an hour in the library while I did the calculus problems every day for 1 hour. And like if I had any struggles, I could just ask her and she could solve the things really easy for me. Mostly she watched me do them, but it kept me accountable and got me like a 93 in the class, which like otherwise I probably wouldn't have solved enough problems and I wouldn't have known what to do. That's what math is. You just keep solving the problems and then you get good at it. Yeah, so there's nothing wrong with getting a tutor to excel, and it got me a nearly full ride scholarship. So no complaints there. But yeah, I hope you guys are doing well. Hope everyone's having a great Wednesday. It's been a great stream. I'm glad that I could join you guys today, and I'm glad that I have my health back. And every time that I'll leave you this piece of knowledge or this piece of wisdom, every time I get really sick and I come out of being sick, I feel so thankful to be alive. Like it just feels so blessed to wake up. Like I wake up in the morning and no matter what problems are happening, I got a couple guys working on my house right now and like they come with problems every day. There's always something to solve. And it requires my decision. And normally I'd be grumpy about it, but like I wake up and I'm like just thankful I'm alive. I look at my kids and I'm just like, wow, we're all alive and we are now healthy. We were all just dying 2 days ago, it felt like. And it underscores the importance of health. So take care of your health, everyone. Make sure you take your multivitamin, your whole food multivitamin. Make sure that you're getting exercise every day, at least an hour. Make sure you're taking care of your body, getting good sleep, eating well. Your health is the most important thing. It's more important than your money. If you don't have your health on lockdown, what's the friggin' point earning all the money? The money doesn't matter. When I was sick in my bed, I felt the same as if I had 10 bucks to my name as if I had 10 million. There's no difference when you're throwing up your guts. So just remember, health is wealth. Prioritize your health. And I wish I could have this feeling all the time. You know, after you're sick, the world's just like euphoric. Like every breath is amazing, and you just appreciate everything so much because you didn't have. Like I couldn't walk across the room on Monday night. Yeah, on Monday night, I couldn't walk. That's how sick I was. And it's like just taking pleasure in the simple things and enjoy what you have. And so every time I'm sick, it's horrible. I hate being sick. I have 3 kids and they're with the school environment and hanging out in sports and all this stuff. They get illnesses and it sucks, but it is what it is. But I'm thankful every time I'm done being sick because I'm like, wow, how good is life? Yeah. Anyway, thank you, everyone. Appreciate the likes. Appreciate everyone tuning in tonight. If you're watching the replay, hit the like button, drop me a comment. You can follow me along on Instagram at Mike Rosehart if you want to see my daily stories where I share stuff, or on Facebook. Again, Mike Rosehart is a good place to find me there. You see a little blue check mark on Facebook. On Instagram, they gave me nothing, so look out for the fakers. It's just at Mike Rosehart. There's nothing else there. And remember, the secret to unlocking wealth through you is 3 levers in your control of your financial future. Spend less, earn more, and maximize returns in the difference. Bye, everyone. See you next Wednesday.